in. My name is Mark Kapczynski. I'm the CMO over here at Gooten, and today we're going to be talking about tax and tax automation and some of the challenges with understanding tax in our retail e-commerce world. We're very lucky to have our friends and business partners from Avalara. Kevin and Clayton will be walking through things. Logistically, we're going to go through intros next. You might see Kevin in the chat window, so if you have questions, feel free to post your questions into chat, and Kevin's going to be working sort of behind the scenes to try to help us answer as many questions as we go through. We'll also take questions at the end as well, so if you do have questions, put them in the chat window. Kevin will do his best to get through as many as he can during the session. We'll also try to pick out a few at the end that are kind of apply to everyone that we'll kind of discuss with Clayton directly, and just definitely, put all your questions into the chat window. Logistically as well, if you have friends or colleagues that want to see the webinar, it will be hosted on demand after our session. Zlata from my team will be sending out a link with that information as well. And I think that probably covers about it. Next week, we have basically, or just one final thought, right, is every Wednesday at this time slot, we are doing a different webinar. We have another series of few good ones coming up in a row around marketing, from branding to paid media to email marketing. So look out for that. And I think we are either live or almost live with a web link to the whole webinar series as well. So we're kind of getting all that together. So check your inbox for more information on all the webinars as well. And we can go from there. Clayton, can you go to the next slide for me? So just again, I'll be your moderator today. Again, I'm Mark. I'm the Chief Marketing Officer here at Gooten, and just really glad to have everyone. Clayton, I'll let you and Kevin introduce yourselves, and then I think you're going to just take it away from there.
Yeah, Kevin, hop on in, and then I'll get to rolling.
All right, awesome. Hi, everyone. Good afternoon. My name is Kevin. I'll be trying to answer all your questions as we go. I'm part of the sales development team here at Avalara, and we're interested to see what the presentation is today.
Yeah, and that'll take it away to me. Mark, Kevin, thank you. My name is Clayton Goodhue. I am a Senior Manager over at Avalara, and I run our a sales team, a team of account executives that really cater to our what we call emerging small business space. First and foremost, thanks to Mark and the lovely folks at Gooten for hosting and having us today. It's always an interesting thing, in in a holiday readiness, a holiday webinar series. If you are expecting to hear about branding, marketing, all of these really cool, interesting things that companies typically gear up for the holiday season, you're in the wrong place, because today we are talking about tax compliance. And I kid, I jest. This is typically not the most attractive thing that companies need to look at, right? You're running your business. Typically, tax is not at the forefront of what companies are thinking of as they gear up for holidays, or just in sort of their everyday life. But it's important. And what we're going to cover today sort of walks through some of the basics of why tax compliance is important, what are some of the high-level themes of tax compliance and what companies face when attempting to be tax compliant. And we'll talk a little bit about at the end about who Avalara is, how we fit in, and how we're helping companies navigate the world of transactional tax compliance, get back to focusing on things that are more core to their business. Just for a little bit of context from me, I've been with Avalara for going on 8 years now, so I spend most of my day talking with companies like you. So let's hop into it. One thing I always attempt to promise when I do these webinars, of which I do many, I try to keep it short and sweet. We budgeted for an hour. We have an hour today. The intent is we'll go through these concepts. We'll try to keep it around 30, 45 minutes. We'll get to some questions. Mark will jump in along the way. Try to keep it as upbeat as possible, and ideally return some time back in everybody's day. So let's jump in.
Clayton,
branding.
Clayton, sorry about that. One more thing. You're also going to have some polls along the way too, right? For questions for some folks to interact with. So I just want to give folks the heads up on that.
Great point, Mark. Yes, we'll have a couple of polls along the way. So we will try to keep this as interactive as possible. Yeah, great point, Mark. Okay, let's talk a bit about why we are on this webinar today. Why does tax compliance matter? If you take it back, not even 10 years ago, but for a long time, when you thought about tax compliance, it was really a challenge on the sort of the enterprise, the medium size. This is the bigger businesses. And over the last couple of years, due to a number of different factors, some of which we'll touch today, it's becoming a problem that every person, every business faces every day as different tax laws are enacted, as the economy shifts and fundamentally changes the way that people sell things and interact with their customers, their partners. This has become a challenge that is not centric to a really large company. These are challenges that now small companies getting going, companies that don't necessarily have the resources of an enterprise type multi-million, billion-dollar company, they're facing the same challenges these days. And really it centers around two concepts. You have states for a long time that were running at a budget deficit. You have states that transactional tax compliance, of which sales tax makes up a big portion, they need money. And the sales tax makes up a large part of their state's revenue. So what are states doing about it as they look at this world of e-commerce now? They're saying, hey, I have billions of dollars that I'm unable to collect from sales tax revenue that I should be. And so they're going about enacting, in the last couple of years, a series of changes that really aim at their end goal, which is to get the sales tax revenues flowing into their state coffers, but certainly has significant relevance to companies that may had previously not had to deal with a lot of the challenges of sales tax compliance. Now, we'll talk about these concepts in a little bit more depth: economic nexus, marketplace fairness, some of the challenges that companies like you face today. But that's the one sort of macro thing that we're seeing. The other is just the fundamental way that companies kind of need to do business now, right? If these are companies that, with the crazy times that we're in, they're adjusting the way that they do business. They're opening different channels. They're leveraging great partners like Gooten to find new ways to attract customers to buy their services or goods. When a company changes the way that they do business too, it's also a different time where you really got to look at, hey, did what I change alter the way that I need to be compliant with tax? So you have these kind of two different things. You have the laws that are changing. You have the way that businesses are looking to do business is changing. And within all of that, it behooves companies to just look and say, hey, am I doing tax right? So let's talk about, hey, great. I hear you, Clayton. I need to sort of reevaluate. It's been a while since I've looked at my tax compliance process. Where do I start? It starts around this concept of nexus. What is nexus? Nexus is a fancy word. It is a word that basically just describes whether or not a company needs to register, start collecting, and start remitting sales tax to a particular state. Two sort of fundamental ways that a company needs to look at nexus creating activities, meaning things that I do as a business that would give me that responsibility to, when I make a sale into that state, to be registered, to collect, and to remit sales tax. The historical concepts that have existed for a very long time center around, where am I physically located? And we have this list on the right, and I'm not going to read through every one, but really companies look at, where do I have people? Where do I have inventory? Where do I have property? Where do I have stores? Where are my people physically located, or people that influence my business, boots on ground? And that's sort of the first thing that companies really need to take a careful look at in evaluating, do I have a responsibility to be collecting when I make sales into a particular state? So as a company, as I look and maybe I gear up for a holiday, I hire a temporary employee, I choose to be strategic in the way that I maintain my inventory to get those goods to someone quicker. These are different activities as a business that can change the way that your company would need to comply with tax. These are the laws that have existed for a very long time, and it all follows where is the physical footprint of your company. Let's talk real quickly about the newer advent. And there's really sort of 4 things that have popped up in the last couple of years that have fundamentally changed the way that the nexus concept works. And we'll go through them one at a time, starting on the top left. This is a big one that everyone likely has heard about, and if you're not, it's the single biggest change that has happened that impacts companies as they look at tax. It's called economic nexus, and basically what it suggests is now it's no longer just a physical requirement that may necessitate your company getting registered, starting collecting on sales when you make it into a different state. Now a company needs to look at the number of dollars they sell, the number of transactions that they sell, and it doesn't necessarily mean you have to be physically located in that state to have to start to collect tax. We're going to dive into this concept because it is the biggest one that has changed. On the next couple of slides, we'll give some examples. But one thing certainly to point out is almost every single state that imposes a sales tax has this type of law in place. Missouri and Florida are the only 2 states that do impose a sales tax that don't have economic nexus yet. So pretty blanketly, states have adopted, hey, a company now needs to look at how much and how often they sell into my state to determine whether they should be collecting tax. We'll dive into this in more detail here in a minute. Right on the tails of this economic nexus concept came what's called marketplace facilitator laws. What marketplace facilitator laws do is they basically suggest to a company like Amazon, eBay, Walmart, these very large marketplaces where companies like you can sell their goods, that the marketplace becomes the responsible entity for calculating, collecting, and remitting sales tax on all of the different sales made on their marketplace. Now, that's sort of blanket and that's sort of broad. There are intricacies state by state and what exactly the rules and the laws are. But from a high level, the intention of this is to say, hey, everything that I sell on Amazon, Amazon is now responsible for collecting and remitting. Getting to sort of the fundamentals of the state doesn't want to have to go look at the thousands, hundreds of thousands, millions of people that sell on these marketplaces. They want to hold the marketplace responsible for being the one that gets sales tax dollars to the state. And this is sort of the same concept because it's a little bit more in the middle, and not every single state has adopted these laws, but you can see for the most part, the states in green, a lot of states have adopted laws that are shifting this burden of tax compliance onto the marketplace themselves. And so now everybody's caught in a little bit of a middle ground because there's some states where the marketplace will be and should be responsible for collecting, remitting the tax on your behalf. And there's some states in which the marketplace can still shift that burden onto the people that sell on the marketplace. What I will say,
Clayton?
yes, please.
Hey, a quick question. So what's the best way for people to keep track of all of what you just said here with the different states, different options, and how that may impact them? Is there a central resource for all of this, or is it just obviously maybe best to work with you guys, or I'm just kind of curious as you're going through this, because I know in my head I'm like, wow, there's a lot of stuff here, and everything varies by state, and locality. That can you explain that or add in on that too?
Yeah, Mark, and it's a great question, and it's hard to do these presentations on tax without it feeling like, whoa, there is a lot here. And I think that speaks to just, it's a necessity for a company to just keep track of the stuff. It's ever changing, it's very complicated. So Mark, sort of two-part answer here. One, Avalara has a great library of resources. We publish articles a lot on the changes in the way that states are adopting these types of laws. What do companies need to watch out for? Ideally, they're a little bit more bite-sized. It's not, getting into the letter rulings. It's just, hey, here's an update. How does this impact a business like yours? So I would encourage anybody that wants to pay attention to how these laws may be changed to tap into the resources that Avalara provides that are just geared at education. Because all of this really starts with education. And for a company that says, oh boy, yeah, I have to track economic nexus. I have these challenges because I do sell on marketplaces. We'll talk a little bit about how Avalara solves a very complicated problem with a pretty simple set of solutions. The intent, Mark, is for companies that do face this challenge, we do have solutions that really ideally track, pull data the right way, help companies report in states that they are responsible for reporting, and in states where the marketplace is doing it, leave it to them. So we'll touch on that a bit at the end. I think one is a function of being educated about this stuff and understanding, is it a challenge to my business? And then secondly, certainly looking at options to get out of this game and try to automate through technology. I'm not sure if that fully answers your question, Mark, but hopefully for you and the folks out there, it provides the right direction.
Yep, thanks.
And, and to Mark's point, and I think I have it on a slide here, if I was doing this presentation a year ago, these would look a lot different. So it suggests that, hey, you got to keep up to date because this is ever changing. So two others I'll touch on quickly because a lot of the concepts of economic nexus and the marketplace facilitator laws, they are the biggest two, quite certainly. But companies that have affiliate programs, companies that are doing sort of click-through marketing with an in-state referral agent, it's the same thing where I'm looking at my relationships with these different companies, the way that I solicit sales, and a lot of these states have different laws that gear at affiliate relationships or the way that you market and that you solicit business for your company. So let's just really quickly dive into economic nexus, because it is, marketplace facilitator is a very important concept, and it's challenging. It's challenging to understand who has the burden, who is responsible, how do I report. But ideally, the intent of that law was to remove some of the burden from companies that sell on marketplaces and shift that burden to the marketplace themselves. The intent being making life a little bit easier for a company that does sell on Amazon. We're not quite there yet because it's still complicated, but that's the intent. On the economic nexus side, the intent of the law was really to shift the collection responsibility onto the selling party. As the rise of e-commerce has continued over the course of the last 10 years, in this instance, South Dakota went to the Supreme Court and basically said the concept of just having to be physically in my state should no longer apply. And so in a landmark ruling, essentially what was created is this precedent for a set of laws that says, okay, companies now need to track how many sales they make in both dollars and in some states, the number of transactions. And that can now be a trigger from that point on for a company to start to need to collect tax without having any physical presence in my state whatsoever. Fundamentally changing the way that a lot of companies have had to deal and had to look at and had to track tax compliance. So we're going to look at a couple of examples, because one thing that you will unfortunately find is the constant with tax is that there is no constant, and every single state is going to look at this a little bit differently. So if we go left to right, every state, there are important pieces of information that a company needs to understand. Effective date. When did these laws go into place? Most of the laws went into place at the end of 2018 or in early 2019. And so for a company to really understand, should I have been collecting then? Should I have been collecting now? It's important. Hey, when did these laws start? So everybody can see we're at least a couple years in, or almost a couple of years in on most of the states. As the slide suggested previously, almost every single state, exception is Missouri and Florida, have enacted these laws. And now I look at the trigger. What do I need to track that will give me from that point on a responsibility to start to collect sales tax? If we look at Colorado, it's only sales. The next thing we look at is, okay, what's the threshold? In Colorado, it's $100,000. So for a company that's selling into Colorado, the challenge becomes now, how do I track sales? How do I know when I get to that $100,000 threshold? And from that point on, how do I make sure I go get registered? I now start to collect on sales made into Colorado, and I file and remit the appropriate tax returns to Colorado from that moment moving forward. And you know, as we look at the next couple, they all sort of follow the same structure. When did the law start? What is my trigger? And what's the threshold? Now, Hawaii has sales and transactions, or sales or transactions, very important distinction. So in Hawaii, a company would need to start to look at, as I make sales, do I reach $100,000? Or have I gone over 200 transactions? That creates that moment in time from that point forward that I would need to start collecting and remitting sales tax. Tennessee is one of the examples of kind of the top threshold. They say you don't have to collect up until $500,000. So hopefully this gives everyone at least somewhat of an idea on these newer laws and what a company now needs to track to make sure that they understand where they need to be collecting. I mentioned before, and to Mark's well-made point, this stuff changes fast. October 2017, there were some of these states that were kind of kicking the ideas around, and you saw 2 years later, it was basically every single state had adopted this. So I think it's a well-made point by Mark. All of this and why we're doing this today, it starts with education. This stuff is moving, it's changing constantly, it's complex. It's typically different state by state. So as a company looks, the first part is, hey, I got to understand, do I have a challenge here? Is there something I don't know? Should I look at my tax compliance process a little bit more diligently? And then certainly tap into resources like Avalara to make sure that I am continually educated as this stuff does inevitably change. And you take a poll and you look at companies that operate, and you try to figure out, well, okay, how many states does a typical company need to be collecting, remitting sales tax in today? And this is an informal survey done by Avalara, but directionally it should provide some clarity. A lot of companies just don't have that single home state requirement anymore. They've triggered a threshold and maybe a couple of the different states. They're now collecting in 1 to 10 states. Maybe they've seen big growth and now they're in 11 plus. But the point here is $100,000, a couple of hundred transactions. The way that a company grows to get to a place where tax compliance should absolutely be something they want to be educated on. It doesn't take a whole lot these days versus previously you needed to go physically be somewhere to have to start to worry about it. So we're going to pivot a little bit here, but I'll pause and see if maybe Mark has any questions or anything that we want to talk about before we get to the concept of, all right, I've looked at my business. I understand where I need to be collecting tax. What next?
Yeah, no, I think you're headed the right direction. I know, I think our partners are definitely going to be most, eager to really understand, how should they be thinking about charging sales tax, and then, basically, what can our partners do to make sure that they either, are cover things properly, or that they can prove that they're exempt from having to, from being charged sales tax by Gooten itself. So I think as you move forward, tying it back to, our specific partners and, how they might have to either, I guess, prove that they're exempt, or the certification process, I think that'll help them as well.
Yeah, certainly. So we'll talk about now the concepts of, when do I have to collect tax? How do I, the concepts around exemption certificates. I can touch a little bit on what now reporting requirements become in a marketplace facilitator world. So great, Mark. I'll, hopefully in this next section, we'll cover some of that.
Terrific, thanks.
So I typically like to tell a story in this part where now, I'm a company and I have identified, hey, maybe there are a couple of additional states that I am not in today that I should be in. Hey, great work. It takes, you have to go get educated. You have to determine, yes, I have a responsibility. I'm going to go get registered. And, what's the unfortunate prize that you get for that? Well, now you have to adhere, and you have to understand the rules for proper taxation in that state, of which there is incredibly different depending on what state you're in. So typically the first thing a company thinks about once they have identified a state where they are responsible for collecting and remitting tax in is they determine whether or not what they're selling is even taxable. And, we have some funny examples up here where, depending on if you have takeout in Colorado, the straws and the cup lids are taxable, the cups are exempt. Whether or not a bagel is sliced in New York will define whether or not you should be charging tax on it. Candy bars in Indiana, Snickers are taxed, Kit Kat and Twix aren't, likely because of the flour content. So these are sort of funny, bizarre examples, but it does show you there's some pretty crazy particularity in how products or services are taxed state by state. Most commonly for companies that we work with, we see challenges in clothing, in services, in software, in food, and vitamins and supplements. So these are the typical categories where companies do face challenges just to determine, is what I sell taxable in the state? Clothing, for example, there's a number of states that, like a New York and a Massachusetts, that actually have thresholds. So if you sell above a certain threshold, it's taxable. If the shirt is below a certain dollar amount, it's non-taxable. So the next thing that a company would need to do is really just figure out, how are my products and services classified as I now become registered in Washington State? And once I do, the next challenge becomes, how do I navigate all of the different rates and rules and boundaries, because it's not that each state has a flat rate. If you're selling in Michigan, hey, congratulations. You can see on this map that Michigan only has one sales tax rate. I think it's maybe 7% across the board. But more commonly, you see these different colors which represent sales tax jurisdictions in the United States. And as we sort of drill in, what you'll see is, now the challenge becomes for a company, how do I make sure I understand where I'm selling it to, that my product is indeed taxable? And now how do I take the address and make sure I understand what's the right rate to charge? And this is an example in Commerce City, Colorado, where you can see here, basically, depending on what side of Locust Street you're on, if it's 7501, I'm calculating 4 3/4% tax. And if I'm just a little bit seemingly to the south in this example, I'm collecting 9 1/4%, and that makes up almost $100 difference on this order. Important from a compliance perspective, and certainly important from a customer service perspective. Nobody likes being overcharged, I should say, when it comes to sales tax. So just taking us a step back, first step, let's figure out where we need to collect tax. Tackle the concept of nexus. Second step, how do I make sure what I'm selling is actually even taxable? Third step, if I've cleared those two, how do I make sure that I'm charging the right sales tax rate? a very significant challenge for companies that enter into a Colorado, Washington, California, states with complex tax jurisdictions. And I think now to Mark's point, well, what if I don't collect tax? A lot of companies that we work with, they do the same thing. They want to know what states should I have a responsibility to collect tax in? But maybe you make sales that are to an exempt entity. Maybe it's they're going to be reselling it, or maybe there's a litany of reasons why the person that you're selling to, you're not responsible for charging them tax. Tons of different reasons. Anytime that you're selling something and you have a non-taxable event because of the entity that you're selling it to, instead of collecting sales tax, you need to collect the proper documentation as to why you didn't need to collect sales tax. So that takes shape in what's called an exemption certificate. There's different exemption certificates for the different types of exempt transactions that companies are handling out there. But if I am making sales, I am not collecting tax because of the person I'm selling it to, and in turn I am collecting an exemption certificate. This is a challenge for companies that maybe they don't even need to collect sales tax on most of the things that they sell. So, as we follow, where do I collect tax? Is my products and services taxable? How do I calculate sales tax? Or how do I go about collecting the proper documentation from my partner or my customer ecosystem so that I don't need to charge them tax? That takes shape in the form of collecting an exemption certificate. And at the end of that whole story, what do I have to do at the end of the day? And this is a challenge both for people that sell completely taxable or they have some portion of exempt sales or somewhere in the middle. You have to file the tax returns. And so this really takes us to, I've registered, I'm collecting my exemption certificates, I'm collecting tax when I need to be. I got to send all that money to the state. I got to properly navigate all these different forms. The states all want to see it a little bit different. How do I pay the state, file my tax returns, make sure I respond if they have any questions to it? This kind of bookends our sales tax compliance process. And, harking back to some of the marketplace facilitator laws, there are a number of states that require that, you put in the number of sales that you made on a marketplace so they can start to track this stuff. So this is the challenge of, all right, I have taxable sales. I have exempt sales that I've collected certificates for. I sell in marketplaces. How do I aggregate all that data, get it on the form that the state wants to see, get it there every month or quarter or year, depending on how often you need to file, get them the money for the sales tax that I've collected, and make sure I do that aggregating sales typically these days made in multiple different places. I'm looking at the clock, 10:35. I told you I'd try to keep it short and sweet. So we'll get through the rest here, and we'll ideally get on to some questions and some answers. But if I'm to sum it all up, now imagine I'm coming on and I'm checking out in a cart. The challenge now becomes for someone that's facilitating that sale through their website of, all right, how do I get all of this kind of done in an instant? How do I look at the address, understand how the tax is calculated, where it's calculated from, whether or not I am selling something that's taxable? Do I have an exemption certificate on file so I don't need to charge the customer tax? And in that split second, make that decision, store the relevant information, make sure I'm ready for an audit if that ever happens to my company. And how do I do it in a split second to make sure that the customer experience is really smooth as they purchase from me? So I'll pause there again because we're going to switch gears and just really quickly talk about how Avalara helps companies tackle, what is the set of challenges that I've laid out in the first 30 minutes today. But I will invite Mark back in. Any questions that came about that we can answer generally about that topic before I move on?
Yeah, I think one thing that's come up, and I know we've seen it just with people emailing us too, about everything you're talking about today is just for the US, right? And so maybe you can kind of touch on any international implications of this and like how people should be thinking about that. Obviously, maybe as a topic for a full topic for another day, but if you can just touch on, hey, I sell internationally. Do I have to worry about things internationally as well?
Yeah, Mark, it's a great point because you're right. And this has been very domestic focused. You're also right. You got about another 35 minutes. We can do it for international as well. But, as companies and as interesting technologies break down barriers of selling internationally and really allow companies to target that international audience, this concept just extends across the borders. So 2 fundamental ways that we talk to companies about what they need to think about, both which Avalara can help support. The good news about the international tax regimes, or most of them, I should say, they don't have this crazy complexity in these thousands of different rates like the United States does. The VAT regimes typically have, in the European Union, for instance, they have a VAT rate. It's anywhere from 15 to 25 to 30%. It's uniform across the country. And so you're charging your VAT rate, and this is all depending on how you do business. But for the most part, the actual rate that you charge isn't the challenge. The challenge becomes, okay, do I need to, it's the nexus concept, right? It's the, do I need to be registered in Spain and in the UK when I'm selling there? Because then certainly the challenge becomes, how do I register? How do I comply? How do I file my tax returns? How do I handle language barriers? And all the things that you would think of as a challenge of selling internationally, same concepts apply to tax. Our lovely neighbors to the north, Canada, they have a little bit more of a complex GST, PST, HST, so they have 3 layers of tax. But again, getting back, we have a bunch of great information on what sellers need to think about internationally. And so I would, maybe we can send some of those out as a follow-up, Mark, because it's a similar challenge underscored by different components. The other thing I will suggest is it's not necessarily VAT compliance, but a lot of the challenges that we see with sellers, and this is a little bit more on the tangible goods space, is understanding how to navigate duties and tariffs. So the 2 fundamental concepts there are, how do I classify my items to HS codes, which is a customs duties type of a thing, and then how do I calculate any relevant duties and tariffs. So I don't know whether or not that's absolutely relevant to this audience, but certainly a challenge that even transcends whether or not I need to be registered, is how do I handle that bit. So, Mark, maybe that's a follow-on webinar, or would you have some good educational material aimed at that international use case that we can send out to anyone that might be interested? Good question.
That's great, and I think maybe what we can do with our you guys can do with our team is we can maybe put together some of the best links, maybe the top 5 or top 10 best links that we should steer our partners to review and so on.
Yeah, it's a great idea, Mark. And so yeah, let's circle back after this. We can compile some, hey, you don't need to go look for it in a million places. Here are the top 5 links, top 5 pieces that if you're selling internationally, you may want to take a look at.
Terrific. I think that'll help. Okay, I'll let you keep going.
All right. Well, we've talked a lot about challenges and problems and barriers to companies being able to just effectively focus on selling products or services, which I think most people are more keen on doing than navigating this. But I do fundamentally believe, as I've suggested a couple of times, it starts with education. You need to know if you have a problem before we talk about how we would solve that problem, or how maybe Avalara can help a company within the tax compliance space. So, we really look at it as everybody thinks about tax compliance and they immediately think about, oh my God, there's so many sales tax rates out there, thousands of different rates. And, really what we found, and hopefully what this presentation has sort of underscored, is that's true, but it's an iceberg. Like, companies need to understand where they need to collect, how their products are taxed, how to assign that jurisdictional rate. But as Mark suggested, maybe I have more of a problem with collecting exemption certificates, filing sales tax returns, syncing data from a marketplace just to show that, yes, Amazon did remit tax on my $20,000 worth of sales. So, really when we look at the Avalara tax suite, each of these different portions that I've touched on, we have something that aims at helping a company either understand where they have nexus, or once they do, comply with the different rules and regulations in those states. And so it really starts with nexus, and it comes to Avalara maintaining all the product taxability logic, so you don't need to understand whether or not your shirt is taxed in one state versus another. We maintain all of the updates to rates and rules and boundaries, so help companies calculate that accurate sales tax rate without them having to go and figure it all out on their behalf. We are working with Gooten on exemption certificate management. How do we go and help a company, and in turn, their partners, make sure that they have the right documentation between the two parties to so that they don't need to charge tax, all the way through to filing, returns preparation, remittance to the state, paying it. And then at the end of the day, this is all about proving that you charged when you needed to charge, you didn't charge when you didn't need to charge because of this piece of paper or this electronic document. And so at the end of the day, if you ever get audited 4 years down the line, making sure that there's access to quick, readily available information to show that you did the right thing. And that's what Avalara is all about. So we have kind of a 5-step process to sales tax compliance for most companies. Now you can absolutely throw in maybe international here, or maybe it's, hey, I'm concerned about landed cost or duties and tariffs. But for the most part, it starts with knowing where you got to collect tax, which Avalara can help with, getting set up and getting the right permits to start collecting tax in those states once you've identified, which Avalara can do on your behalf, calculating the correct sales tax amounts. Avalara plugs in with about tons of different e-commerce platforms or whatever, or if you have an ERP or whatever, wherever you take your orders, we can help calculate sales tax in those critical platforms. We help companies track and manage exempt sales, and at the end of the day, file those tax returns with the states or local authorities. And just for some nomenclature on what our products are called, we really have one that's kind of geared to every single one of these steps along the way. So if a company truly just wants to get out of the sales tax game, Avalara can be the right partner for you. If you want to automate bits and pieces and take on other steps yourself, absolutely well supported for that as well. And, I'm not going to dive too far into this, but I think it is something that's worth mentioning. We're also a partner for something called Streamline Sales Tax. It's a really interesting program. The SparkNotes version is a number of states banded together in an effort to simplify sales tax for qualifying companies. A certified service provider like Avalara can do a lot of this for free. So if it's registration, calculation, or remittance, depending on what state you need to be registered and collecting in, and depending on how your company operates, there's opportunity for basically some of the states to fund this on your behalf. And the goal of any of the states at this point is to get tax calculated correctly. So I know we're kind of nearing time. I told you I want to give some time back, but if this is something that you want to learn more about, you want to learn more some of the qualifications on how a company would be eligible for a program like this, please reach out. We can send out these some of these slides, and as Mark suggested, maybe this is something we include as one of those links on a follow-up piece that people can do a little bit more reading on. Great program, leveraged through a certified service provider like Avalara. Really helpful for companies that have expanded into states primarily due to economic nexus, like we talked about previously. Mark, I'll let you jump back in one more time. Anything before we just talk a little bit about when to review compliance and wrap up with some Q&A?
Yeah, no, I think this is great. I mean, I think the key, takeaway for me, and hopefully for the folks that are listening in is, this is really complicated. And I know a lot of folks have been emailing us here at Gooten to understand, the implications of whether Gooten's going to be collecting tax or not. A lot of that stuff is certainly beyond what Gooten's able to either discuss or provide advice on. That's just not our specialty. We know what we have to do ourselves, as a company to comply with tax. So, what we've done as a business is partnered with Avalara to be able to provide some of the cert capture process and some of the things that, you need to do, I guess, as part of this overall tax process. Some of that will be, just provided sort of, out of the box, I'll say. And then, for things that are beyond that, or really trying to figure out whether you have to, pay tax in different areas, if you have Nexus or not. I mean, I think that's really where, directly engaging with you, is sort of the next level up as well. So, Gooten, we're an e-commerce print on demand provider. We're not, tax attorneys and tax accountants. So that's where, we're definitely deferring to you guys. And so I think maybe, I guess, Clayton, what would be helpful is kind of, explain what people get as part of working with us in terms of the cert process, cert capture process, and then, sort of where does that end, and, where do your, additional services kick in at people needed, just so there's a clearer line there for people to understand.
Yeah, and so I think, I mean, there will be elements of Gooten's tax responsibilities that Gooten is working with Avalara on to try to facilitate. And a large part of that will be collecting that documentation to the partner network. And I really think, Mark, like, where we provide value in these partnerships is really being that extension of Gooten in this instance that really helps talk to companies or their partners about sales tax compliance. And that's sales tax compliance as it relates to, okay, now what does a Gooten partner, what are the challenges that they're facing? And we're not all tax lawyers and tax attorneys either, so I don't think that the expectation should be that we're going to be able to provide legal advice. Like, there's great partners out there that if you want. Now, that being said, I've just spent the 8 years talking about tax compliance all day. We've worked with thousands of companies facing similar challenges. We provide tons of educational material on what a company should be doing, and we're always willing to have a conversation, if anything, to just talk about what like companies are doing and how they're being educated or tackling these challenges. So absolutely, the intent here is Avalara is Gooten's kind of extension when it comes to sales tax compliance. And if there are questions that extend beyond Gooten's compliance themselves, and really, hey, I'm a Gooten partner. I'm curious what I need to do to maybe calculate tax now, or concepts of Nexus, we're more than willing to have those conversations.
Yeah, I appreciate that. And I think the key is really tax is such a unique situation to every single business that, certainly it's hard for Gooten to be able to provide individualized company advice. But I think, by working with you, we're trying to provide a resource and a point of direction to go with, what is a very complex topic and subject to figure out that Gooten can't do this. So I think by making Avalara available and doing these kind of webinars and stuff, I think what we're trying to do is just help give people at least a starting point of where to go to figure this out as to what they need to do. And it may be simple, and in other cases it may be more complicated depending on the situation, but at least I think you guys are the best starting point to help our partners start the navigation process here.
Yeah, and Mark, it's a really good point. A lot of the times when we do these webinars, we'll get a question here, a question there, which is a relevant topic for every single person on the call. More likely, we get a question that's very specific to someone's unique business scenario, their requirement, this sort of funky iteration on the way that they do business. And a lot of the times we find ourselves, hey, well, great, let's talk about it after, because that really pertains to you. And so it starts with this sort of high-level education. What do I think I need to know? And then as we get into talking about, hey, how is this relevant for my company and in my specific unique scenario? Those are times when it's a little bit more of a one-on-one. Let's talk about what are the challenges and whether or not Avalara has anything that may be able to help. So I think it's an incredibly fair point.
Great. And it looks like in the, just maybe kind of quick thing, seems like in the chat there's a lot of questions about the cert capture program specifically for Gooten. Can you just comment on, what else or what that process looks like? What do people need to be doing specifically to provide that that certification and so on? Maybe just kind of maybe a little bit more specific on that around our specific merchants.
Yeah, so I don't really know what the sort of the specific question is, and maybe if I can take a look at the chat after and try to get to the root of what the question is. But I know Gooten is going out and approaching a lot of it.
Sorry, Clayton. The root. I think the core question is just like how do people provide the certification that Gooten doesn't need to charge them sales tax.
So in the times in which Gooten is collecting an exemption certificate from a partner that they're doing business with, it should be done. Gooten is going to be leveraging the Avalara cert capture solution, and so there should be it should be driven through that, and how a company that is eligible for filling out that certificate, because they're going to be doing something that drives that Gooten doesn't need to charge them tax. They should be able to fill it out through cert capture and through that electronic portal, and get that documentation on that. By the way, that what they're doing with the Gooten platform doesn't necessitate Gooten from collecting tax on that sale. So I don't. I guess I'm a little bit confused on the question still. It should all be driven through the the cert capture portal to fill out the proper documentation that Gooten needs to collect in the event that they're making that exempt sale.
I think, if I may interject, I think one of the main questions was that there was supposed to be an email have gone out that had a link in it coming from Gooten. I think that was at least one of them. Yeah. Yeah.
So Greg, our head of finance, is listening in, and Greg just sent me a note that for everyone listening in, basically the cert capture link will actually be available beginning tomorrow, October 1st. So the link will actually be available tomorrow, and then the Gooten will start charging sales tax beginning November 1st. So the link will be out tomorrow, October 1st, and then you'll have a whole month to go through that process to get your exemption, and then sales tax will begin to be charged November 1st. So hopefully that clears up that question. And Greg, since you're listening in, thanks.
So I want to be mindful of time because I know we only got 5 minutes left. And so I'll kind of cruise through these two. Basically, I hope this has become evident in the webinar today. A lot of different things can drive that time when a company just really needs to take a look at, am I doing this right? And if I'm growing, I'm expanding, I'm hiring employees, I'm coming up with strategies on the way that I maintain inventory. A lot of the different things in the way that I've altered my business can impact the way that you need to charge sales tax. Same thing with growth, right? These days, you just really need to monitor how you're growing. And another thing that Avalara, I failed to mention previously, Avalara has a number of solutions that help track this economic nexus, that help understand how to sync data correctly from marketplace sales. So we can support that too. And really at the end of the day, the important part is to take a look at understanding the problem, and then turning to a partner like Avalara if there is indeed a challenge that isn't cannot be efficiently done manually, and leverage some of these suites that we have to get back to focusing on business and not sales tax compliance. I know we only got a couple minutes left. I failed at my mission of trying to give you some time back, but there were some great questions along the way. Hopefully this was beneficial for everybody out there listening today. I think we have some things to do in terms of follow-up educational material, but appreciate the time, and Mark, I'll turn it back to you.
Yeah, thanks, Clayton. A lot of great stuff. I mean, look, tax is not an easy one for anyone, and so I think again we want to make sure that our merchant partners have access to resources like yours in case they have very specific specific questions, like you said, and then for the things that are relevant to specifically relevant near term for our merchant partners, it sounds like the link and everything will be for Certain Capture will be live beginning tomorrow, and then run for a month before we start collecting tax, and then we'll make sure we clarify all that and get that message out more broadly. And I think if I'm kind of picking through the list of questions as well, Clayton, I think one question maybe you can touch on is, and I know we've gotten a lot of this directly via email as well, which is, I'm an Etsy seller and I'm paying tax through Etsy. What happens to me? Do I have to be certified, not certified? Do I collect tax, not? What do I do if I'm selling through Etsy?
Yeah, so the marketplace stuff it's interesting. It's kind of state by state as to what the requirements are for a company that's making sales through a marketplace that is collecting. Certainly, the first step is to be educated on, is it one of those states where there is a marketplace facilitator law? Is Etsy truly collecting tax on my behalf and remitting tax on my behalf? And then the third challenge is there is some reporting requirements, or there could be state by state, and it's not reporting and that you're remitting the tax, you're collecting the tax. Etsy's doing that, and we want to make sure. But there are some requirements on potentially tax returns to just report, hey, I made this amount of sales on the marketplace. So I think we'll send some more information out specifically about marketplace facilitators, how are different states handling. Etsy is the one responsible for collecting tax in that instance, which is good, but it does leave education, making sure that this is a state where they are responsible to do that in, and then whatever documentation I may need when I go about filing my tax return. So unfortunately, I wish it was one of these, hey, here's your answer, but that's the theme of the day. It's unfortunately not uniform. Yeah. So as we get those questions, we'll send some more specialized educational material out on these different concepts, and unfortunately, we'll kind of need to tackle these one by one.
Yeah, that sounds great, and definitely appreciate that. I know my team will work with your team to get out as many different of the appropriate links out to our merchants to help them with some of these kind of top questions and top challenges. But I do hope folks, listening and do realize that tax is a uniquely specific issue for each business, and there isn't sort of one answer for everyone. So do consult with the appropriate resources to figure out your specific case. We hope that the folks at Avalara can help you as well, as a starting point to navigate through all of this. From a Gooten point of view, we'll definitely get as much information out as we have. Again, we're not tax experts ourselves. We're learning what we have to do on our side. And obviously, we're trying to funnel that through to all of our merchant partners at the same time. So I guess with that, we do want to thank our folks at Avalara. So Kevin and Clayton, thank you guys for joining in. I know you guys will be following up with folks if they have specific individual questions. And Kevin, thanks for monitoring the chat window all day to get some answers out there. And for folks on the line, we will, if you can see on the screen, we do have our new holiday webinar link, webinar series link up. So you can check out all of our webinars there and replay any of the past ones. And we look forward to chatting with you next week.